does he? Another man who doesn't look 100 is Charles Pellegrin. He knew I was going to say that. He's going to bring us instead the latest on the aftermath of the US-EU trade deal announced on the weekend. Very useful, Charles Pellegrin.
Absolutely. That story is still very much in the news as reactions to that agreement keep pouring in both on the markets and from political actors. What was initially received with a sigh of relief in the sense that it did bring a tiny bit of clarity about the future of trade between two huge economic blocs is now leading to increasingly harsh criticisms and still more questions about what the future exactly holds. Let's start by looking at the euro exchange rate with the US dollar. The European common currency saw its worst decline in 2 months on Monday after that deal was announced. This after it surged to a 3-year high in the weeks prior over a potential agreement with the US. As you can see on that graph there, as a reminder, the strength of a currency is often seen as a reflection of the health of its economy. A strong currency means there's demand for that currency, thus for those goods, services, etc. That exchange rate still going down this hour with €1 now worth about, we'll have that graphic coming up, I think about 1.15 US dollars. This follows stinging criticisms of the deal within the bloc, notably from French Prime Minister François Bayrou, equating it with an act of submission on the part of Brussels, and even from German Chancellor Friedrich Merz, who had first presented the agreement as the best in circumstances and a way to avoid a costly trade war, but who later underlined the pain it would cost his country's economy, although a pain that he said would be shared also by the US.
I've repeatedly said in recent days that there would be an asymmetrical agreement if there was one at all. In plain language, this means that the German economy will suffer considerable damage as a result of these tariffs. But I'm quite sure that it will not be limited to Germany or to Europe alone. We will also see the consequences of this trade policy in America.
So remind us what's been agreed then, Charles, and of course what happens next.
Well, the German Chancellor mentioned an asymmetrical agreement in that soundbite you just heard, and the main reason for that is quite simple. Europe has agreed to a 15% tariff on most of its exports to the US, while the US will benefit from a much lower rate for its exports heading to the EU, under 1%. In addition to that, Brussels is pledged to buying $750 billion worth of US energy products over 3 years. That's a huge amount. And to invest $600 billion more in the United States. So Trump gets what he wants. Pledges that should help reduce the trade deficit with Europe and investments that are supposed to help create jobs stateside. That fits perfectly with his MAGA agenda, while the EU avoids the pain of a higher tariff rate threatened by Trump after an August 1st deadline. But there are still so many points to clarify. For instance, how the EU can force its companies to follow through with a €600 billion investment pledge, or how it can radically step up its increase of US energy purchases to meet Trump's demands. Last year, the EU imported $80 billion worth of energy projects. One final aspect here is how exactly this deal will be made official. Media reports suggest a non-legally binding text will be released before the August 1st deadline, and that will cement that 15% rate, but it will have to be followed by a legally binding document, which should at least be approved by a majority of EU countries and potentially the Parliament as well.
Yeah, a long way to go. Let's finish up then with a look at the markets, Sean.
Well, in Europe, after closing in negative territory on Monday, on the back of that deal over the weekend, the major bourses are trading back up again at the open on Tuesday, with the DAX in Frankfurt leading the gains just under 0.5% higher. In Asia, eyes are on a different tariff agreement, trade agreement between the U.S. and China, with trade talks taking place in Sweden this Tuesday, with a potential extension of the current trade truce taking place. You can see the Hang Seng in Hong Kong trading 0.2% lower.
Sean, thanks very much. Charles Pellegrin with Business on France 24.